Afternoon, everyone, or good morning if you are in the United States. It's my great pleasure to welcome you all for this GMF conversation on the Turkish economy. My name is Kadri Tastan, and I am GMF-TOBB Senior Fellow with the GMF here in Brussels, and I'm running GMF Office Turkey program here. Thank you very much for joining us today. Please let me first to mention that this online event is a part of series of events organized as part of GMF-TOBB Fellowship on Turkey, Europe, and Global Issues launched by GMF in partnership with the Union of Chambers and Commodity Exchange of Turkey in 2017. And we are very grateful to TOBB for this support. Since the outbreak of the COVID-19, we are trying to come together virtually to discuss some of the most important issues concerning Turkey and other issues. And today's focus will be on the Turkish economy. Indeed, the Turkish economy faces various challenges. Structural problems are compounded by high unemployment, the threat of American and European sanctions, and the economic integration of millions of Syrians living in Turkey. When the pandemic hit in March 2020, Turkey was already affected by a record fall of Turkish Lira and double-digit inflation for the past 2 years. And the pandemic has only aggravated the country's economic problems. But to everyone's surprise, at the end of 2020, President Erdogan opened a new period of economic policy change with the reshuffling of the governor of the central bank and the minister of finance signing the end of an unorthodox monetary policy. The increase in the central bank's key interest rate and the positive messages sent to the markets and investors appear to be the first sign of a change in policy. And despite all the problems and challenges, according to the Turkish Institute of Statistics last year, which was a really difficult year for every country, the Turkish GDP grew by 1.8%, which has surprised many economic observers. Well, obviously, there are many things to discuss, and today we gathered a very good group of experts to discuss through all this. I will leave it to my colleague Jacob Kirkegaard to introduce our distinguished speakers. But again, I would like to thank you to our three speakers and to all of you for joining us today, and to you, Jacob. Without further, over to you, Jacob, and looking forward to discussion.
Well, thank you, Kadri. As you said, this is it's always an interesting topic to discuss the Turkish economy, but I think it's also fair to say that right at this moment it might be a particularly relevant and interesting topic. And I'm really happy that we have a group of very interesting people with very different, I'm happy to say, perspectives on the Turkish economy. So we have with us today Alvaro Ortiz, who is the head of big data research from BBVA, obviously with a unique set of insights into the Turkish consumer banking sector. We have Fatih Özatay, who is the program advisor for TEPAV and a professor of economic at TOBB Economic and Technology University, who probably needs very little introduction to most of the people here. He is an astute observer of both economics and politics in Turkey for many years. And then we have Masraff, who is the director at the Eurasia group covering the Turkish politics and economics, which will undoubtedly have a host of interesting insights when it comes to the geopolitical setting of Turkey today. We have agreed to take each speaker, and I think we will go in the order that I just presented them. Each speaker will speak for about 10 minutes. offering their perspectives on the Turkish economy, after which we will have a brief conversation among us, led by me. And then we really want to have as much engagement with all of the participants on the call as possible. So I strongly encourage all of you to ask questions on the chat, which I will then convey to the panel. But without further ado, I would like to give the floor first to Alvaro Ortiz. Mr. Ortiz, please.
Hello, can you hear me?
Yes.
Well, thank you very much, Jacob, for the to the German Masraff Fund for the invitation. Let me elaborate briefly on the Turkish economy during these 10 minutes. I will start with the Turkish economy during the 2020 year because it was a special one. I will follow with the good news on economic activity front. I think that for this year, there is a more supportive external environment with the permission of the virus. The big challenge will continue to be inflation, and this requires persistence in the monetary policy front especially. And finally, I will dedicate some time on the base on risk scenario. The 2020 was a special year for several reasons. I mean, first, it was a post-recession year for Turkey. Not too many people realize on that. And when the IMF and other international banks and the OECD just applied the rule of minus 5% after the virus, they didn't realize about that. So we were always waiting for 0 or 1%, and finally it was 1.8%. And this is another example that one side does not fit all in terms of forecasting. Economic growth was not also boosted by this recession-based effect, but also by ultra-loose monetary and credit policy. That in the case of Turkey was used more intense than fiscal. But this economy, I mean, this impulse was not the only one to be, this economy was not the only one to be boosted artificially. And if you think about the QE, has been present during 10 years in Europe. And this is also ultra-loose monetary policy. However, Turkey is an emerging market, and the policy impulse was constrained, especially by the chronic external liquidity and financial stability problem, which in other words is basically the combination of very low international reserves and ultra-loose monetary policy. So once the international reserve reached minimums after the summer, a rapid change in policies was the only solution to avoid a collapse at the end of the year. Let's start now with the 2021. I think that the good news coming from the economic activity will persist, not only in Turkey, but for the rest of the country. And growth will be strong for several reasons. The first one is that the actual economic growth momentum is pretty good. The economy posted the 6% GDP growth in the fourth quarter of the 2020. This is important because facilitates an important carryover statistical base effect in the 2021. What is this? It is that mainly, even with 0 growth in quarterly basis, the Turkish economy will post a 5.5% growth this year in 21, just because this effect. So this is important to know. So don't be surprised next year when we analyze the forecast. The economic growth is being higher than expected in the first quarters. I also came from a meeting at the central bank, and we agreed that growth is growing at 5.5% in February, more or less, according to our big data. But the key question is that it will jump to 15 to 20% in only 15 days. Just when we meet the end of March, which is when the COVID hit the economy last year, just because we measure the things year versus year. This leaves that in the first half of the year, the economy, Turkish economy will grow near 10%. So it will have to go to 0, and this going from 10 to 0 is a very sharp deceleration just to achieve 5% growth in the total year. So that poses a very important floor for the economy this year. And this is why the IMF, for example, is forecasting 6% for this year. In my opinion, 5 to 6%, it is a floor for the Turkish this year. I will, and it will happen also not only in Turkey, but to other economies. The external, another reason it is that the external sector will remain very dependent the evolution of vaccines, but in general terms, what we observe is that most of the economies will grow more than the last year, especially the trading partners, France, Germany, Italy. We will still have strong imports given the still strong domestic demand in the first part of the year, but then will ease. And we expect the current account deficit, given this mix of export and imports, to correct from 5.5% last year. There was also due to a special reason due to the COVID, to the 2.5%. Again, there is still one doubt. It is that whether this will be supported by the gradual recovery of tourism revenues, depending on the virus, and what will happen with the normalization of the gold imports. But in general terms, we are also optimistic on the external front. While growth and external balance will be the positive news of this year, I think that the greatest challenge for the Turkish economy will continue to be the inflation. Today, we know that the inflation continues to be high. It is 15.5% in year to date, despite low energy prices due to the pandemic last year. So the recovery of the food price and especially the depreciation of the exchange rate make a big hit to inflation last year. Inflation will remain high until April, but will start to moderate thereafter. Still, there is uncertainty about what the exchange rate performance will be around the year. For example, the last week we have a really sharp swing. It is difficult always to forecast exchange rates, but I think that we have to wait to see whether the inflation revert more clearly. I believe that the key solution or the key policy action to achieve immediate inflation targets, and the immediate inflation target for the central bank is 9.5% at the end of this year, 5% in the medium term. It is just to maintain a tight monetary policy for a prolonged period of time. This will combat inflation not only to moderate in domestic demand through the so-called cooling of the output gap, but also to maintain the exchange rate under control. And without this policy, without this tight policy, it will be very difficult to progress in the disinflation path for Turkey. This also links with the financial stability side of the story. Turkey has a structural external liquidity problem. That means that every year has to renovate 200 billion in the international financial markets. And Turkey is not Saudi Arabia. It is not any rich produced country. So it has a strong dependence on the financial market. These and the low levels of international reserves make that when the external accounts come under pressure, as it happened last year, the pressure on exchange rate can increase very rapidly. When this happens, normally free-floating countries can let the exchange rate to depreciate to temporarily absorb the shock. But in most of the emerging market, there is the so-called fear of floating. In the case of Turkey, this fear of floating is justified by high inflation, but also by the fact that most of corporates, big and small, medium corporates, are indebted in dollars. So sharp depreciation will generate some disruptions. But when the pressure increased during the summer, as I explained before, there was only two solutions. Either to lose international reserves very rapidly, what happened at the beginning of the year last year, and wait for a balance of payment crisis, or either change the course of policy, tighten the monetary policy significantly, and maintain that for a while. And this is what is so far happening now. So what is the adequate policy framework now? In my opinion, the limits for looser monetary policy are exhausted, given the high inflation and the low reserves problem. And the economic policy framework should be rebalanced to maintain tight monetary policy for a prolonged period of time. This is just to restart trust, to enhance the de-dollarization process, and to replenish international reserves, and use some of the fiscal space. The fiscal balance, it is not so deteriorated, to tackle, the more vulnerable household and corporates. In the medium term, I think that this issue of the structural vulnerability, external vulnerability, should be tackled, among other themes. In sum, we think that this year the Turkish economy has a good opportunity. There is a huge carryover that guarantees very high growth this year, and this constitutes a unique opportunity to put the house in order. So in a base case scenario where the policy is rebalanced, as I mentioned before, we should expect growth between 5, 6, 7%, with inflation closer to 10, with the permission of the exchange rate. In 2020, in 2022, the policymakers should look for a more balanced growth, around 4%, that does not generate inflation pressure. However, there is also a risk scenario, and it is that policymakers decide to boost artificially the economy. It will not be the first time in Turkey. Then growth could be even higher in 2021, but at the cost of exchange rate volatility, higher inflation, higher risk premium, and thus preparing the stage for a riskier scenarios in 2022. I'm positive in this base case scenario. What they do, it is very important so far, but what we need is persistence on these policies. Thank you very much.
Well, thank you very much, Ortiz. That was a brilliant overview of the short and medium-term outlook for the economy. Without further ado, let me give the word to Fatih Özatay for his remarks. Thank you.
Thank you, Jacob. Can you hear me?
Yes.
Okay. Good afternoon, and of course, good morning for some of you. Let me first speak about the pre-COVID period. It is important to understand the main vulnerabilities of the Turkish economy, okay? Then I will come to the current situation. Well, one of the main characteristics of the Turkish economy is its low savings rate. Relative to the average of emerging markets and developing economies, the investment to GDP ratio is below their average, okay, but slightly below. However, our savings to GDP ratio falls short of this mediocre level of, falls short of financing this mediocre level of investment to GDP ratio. So, as Alvaro emphasized, Turkish economy is dependent on capital inflows, okay? That means sharp change in risk appetite of financial investors can have important impact on macroeconomic fluctuations in Turkey, of course, on output, investment, and inflation. In the aftermath of the global financial crisis, this ample liquidity policy of big central banks caused an important amount of capital inflows to emerging market economies, and one of them was Turkey. So starting from 2011-2012, we have observed a rather rapid credit expansion in Turkey. But this credit, an important part of this credit supply has been was channeled to construction sector, real estate, so to non-tradable sector, and also at the same time, due to some easing of regulations after the global financial crisis, we observed a pickup in liability dollarization, especially in non-financial corporate sector. For example, in G20, among emerging market economies, at the end of 2017, the highest net international investment position, a negative investment, international investment position was in Turkey relative to GDP. It was followed by Brazil. So this also shows how Turkish economy was vulnerable to change in risk appetite. And in fact, in August 2018, due to some very unpleasant tweets from Donald Trump, threatening tweets, Turkish economy faced a recession, which lasted up to the end of 2019. So at the end of 2019, the real GDP approached its pre-crisis level. But the employment was sharply declined, and we entered to the pandemic phase with a low employment ratio relative to the end of 2017. So Turkish economy faced the pandemic with a rather difficult situation, let me put it in that way. During the 2020, authorities mainly relied on high credit expansion through state-owned banks, and also they, by some regulations, they forced or gave incentive, let me put it in that way, to private banks to increase credit supply. At the same time, there was an unorthodox monetary policy. The central bank kept its policy rate below the inflation rate. So this situation, this policy increased demand for foreign currency, especially from the residents, given the negative real interest rates. But this is coupled with a decline in export revenues due to pandemic, and also tourism revenues due to pandemic. So it put a significant depreciation pressure on Turkish lira. Authorities, the response of the authorities was to sell foreign currency, to decrease the foreign exchange reserves of the central bank to prevent an increase in currency. Increase mean, in my jargon, depreciation of currency. But when the reserves hit to a very low level, the currency jumped, Turkish lira depreciated sharply. So this was, as Alvaro mentioned, this was going to a crisis. Turkey came to the edge of the crisis. So the government had to change its policy. So since November, now the central bank, since November, turned to a orthodox policy. It increased its policy rate considerably. It's around 17% now. And the expected inflation rate is 12%. So relatively, we can say that it's a tight monetary policy. It also simplified its monetary policy. If you have questions later on, I can go into details. And simultaneously, Banking Regulation and Supervision Agency tightened its credit policy. Okay, so these were good news for the financial markets, and Turkish lira has appreciated in nominal terms since November. So currently, this is the economic situation. So what about 2021? Alvaro mentioned forecasts. More or less, I agree with him. But let me mention the remaining main vulnerabilities or continuing main vulnerabilities of the Turkish economy. So the outlook in the medium term will depend on whether the government is going to address these vulnerabilities. What are these vulnerabilities? First of all, again, despite some leveraging in 2018 and 2019 due to the crisis, despite this fact, still the net international investment position is negative, and it's almost, according to latest GDP, 50% of it. Still, the gap between foreign exchange liabilities of the non-financial corporate sector and foreign exchange assets of the non-financial corporate sector continues. So again, that means that the Turkish economy is vulnerable to change in the direction of capital flows. As already been mentioned, we need each year almost $200 billion to finance both the current account deficit and the coming debt repayments. And there are some pending structural problems. But we have also some strengths. What are these strengths? First of all, the public debt to GDP ratio is low. It increased last year by 5 percentage points, but it's still below 40%. This is, I guess, unbelievable in many European countries. It's low. So it means that Turkish authorities have some fiscal space, if needed, to support various sectors and unemployed if this pandemic continues. So this is good news. But the half of it is in foreign currency terms. So it a little bit decreases the fiscal space, okay? Finally, let me finish by what can be done, okay? On the stabilization side, we need this monetary policy to continue. The tight stance of the central bank should continue. Second, we don't need a tightening in budget deficit. It's not too much, but according to Turkish standards, it increased due to pandemic. But the fiscal authorities can announce or a fiscal plan, for example, stating that starting from 2022, we are planning to decrease the budget deficit to a normal level gradually. This will be a good signal for the markets. On the financial stability side, if Turkish authorities can announce to the markets that a non-performing loan issue will not be a problem, because due to pandemic and very rapid credit expansion, there are some question marks regarding the quality of the credit expansion. So we need some stress tests, convincing stress tests to increase the transparency and decrease the risk premium. If these steps can be taken, on the one hand, low reserves will not be that much issue due to decreased risk perception for Turkey. On the other hand, capital inflows will continue and give the chance for the central bank to increase its reserves, of course, if there's not going to be a further negative shock in financial markets. On the structural side, there are some steps to be taken, but I have to stop here, okay? And we can discuss these if you want in the question and answers session. Thank you, Jacob. Thank you.
Thank you very much for this tour de force of the last, I would almost call it decades of Turkish economic and political history. Switching now, I think it's fair to say, to the foreign policy, if not geopolitical aspect of the Turkish situation. Masraff, the floor is yours.
Thank you, Jacob, and thanks to GMF for organizing and inviting me along. The privilege to share the panel with distinguished economists. Before going into the kind of nitty-gritty, I want to start with kind of 3 key takeaways. The first one is, especially after listening to my kind of fellow panelists, I'm even more convinced of that. This economic orthodoxy pivot that we're seeing since November, it's real, it's happening, but it doesn't seem to be sufficient on its own. And me looking through a political economy lens, I think I'm slightly more pessimistic in that I expect this to be more kind of temporary. It's more tactical. I don't think it's going to be very kind of long-lived. So that's the first takeaway for me. The second one is when you look at polls, which obviously we all know President Erdogan follows them closely, there's a secular decline in his support. It's not something totally new. We've seen episodes of that back in 2009 financial crisis, 2015 elections, but this one is more significant. And I don't think it's something that can be addressed with a single bullet. So just monetary policy or just kind of fiscal support, that's not going to be it this time around. So there will need to be a package of measures. I think that's going to include things like, undermining the opposition bloc, trying to cause rifts among them, but using legal routes as well, changing the electoral system ahead of 2023 elections, as well as using foreign policy as a tool to kind of boost and consolidate support as well. So that all brings us to quite a volatile picture domestically and in terms of Turkey's kind of geopolitical position over the next 2 years until elections, I would say. And third is geopolitically, what we have seen parallel to the pivot, the orthodoxy pivot, we've also seen some moderation of foreign policies as well by Ankara. And I think Turkey will manage to keep a lid on these kind of underlying foreign policy tensions until the second half of this year. But I'd say headline risks will rise after that, especially the relationship between Washington and Turkey. I mean, there's a reset opportunity there. Turkey really wants that reset, I think. The US is, I would say, slightly less interested, less desperate for that reset. But there's a host of problems, mainly kind of Turkey's Russian S-400 missiles, but also kind of policy towards Syria, as well as the kind of Halkbank case that will start in earnest in May this year. All of that brings us to a place where the second half of the year, I think, all these kind of reset opportunity will probably break down. Specifically on the S-400s, I don't think Erdogan is going to give up on that or hand them over to a third country or hand over or agree to a joint mechanism, joint operating mechanism with the US. So short of that, we're looking at status quo at best. So you have the missiles, don't use them. In that scenario, you don't have additional US sanctions. But still, that doesn't kind of resolve the, that doesn't give you the reset that you need. And I think the risk of US sanctions over kind of human rights issues in Turkey will also go up in the second half of the year. So those are the kind of three big takeaways. But I would go a little bit deeper into the kind of political economy and why I see this kind of monetary orthodoxy pivot as being not very long-lived. I mean, obviously, the financial stability concerns have been kind of averted. There's foreign interest in Turkey. But what's all this kind of leading to is, this kind of growing with base effect isn't really helping household income. It's not really helping, stopping rise in unemployment and SME troubles. The furlough scheme is ending in March. I think these are important signposts. Inflation peaking in April, and then grace period for problematic loans ending at the end of June. We'll probably see another surge in unemployment numbers. More problems with SMEs. I think it's going to be difficult for Erdogan to kind of cope with this pressure. Again, looking at the polls for the last few months, we see the opposition bloc scoring better than the ruling bloc, AK Party, AKP and MHP, but also AKP's support, core support, without accounting for the undecided voters, is less than 30%, and that's really significantly lower than the last few years. And opposition mayors of Istanbul and Ankara are now kind of scoring higher than Erdogan in favorability rating. So all that kind of brings us to a picture where I think Erdogan's tolerance for this kind of tight monetary policy where households are struggling is not going to be very high. And I think what's interesting is last few weeks, we're recently hearing about these speculations of Berat Albayrak coming back to the picture. Obviously, this was strengthened by Erdogan's defense of his son-in-law. And, their expectations of a cabinet shuffle in March or him being promoted to a vice presidency role or energy ministry, whatever role it is, I think it's unlikely that we're going to see a political rehabilitation of Alvaro this year. I think it's a bit early, but that doesn't change the fact that his impact, his influence on economic policies is there, and we will see it. It'll be through pro-government media, through Erdogan's advisors. And I think Central Bank Governor Abal will increasingly feel this pressure, and that will kind of constrain his room to maneuver on keeping the policy tight for any extended period of time. So I think going forward, the picture in Turkey will resemble 2010s, where you had credible, internationally recognized economy chiefs like Ali Babacan or Mehmet Şimşek, and presenting Turkey as the emerging market darling to investors. But at home, these figures were very much constrained by kind of a lot more kind of populist figures, sometimes close to Erdogan, sometimes not, but the policies were very much undermined. And when you look at Abal, I would argue he is politically less, not as strong as Şimşek, definitely not as strong as Babacan. So his ability to stand up to Erdogan to convince him of another rate hike or keep the policy tight will be more constrained. So it's, I think, going to get more difficult for him to sell this price stability story in an environment where confidence is already weak. We've seen significant inflows since November into the economy, but we haven't seen that much in going into the bond market or equity, definitely not into FDI, right? It's mostly kind of currency swaps, very easy to reverse type of inflows. Locals at the same time are not buying the story. They don't continue to dollarize, but they've, those trends have stabilized, but they're kind of waiting with their hands on the buy button. Anything kind of, if the sentiment changes, I think that's gonna kind of go back to purchasing more dollars. So all of this kind of brings us to a backdrop where Erdogan is increasingly on the defensive. Just look at what's happened in February. We have seen harsh clampdown on university protests. There were cross-border operations against PKK in Iraq. There's this initiative to rewrite the country's constitution. Also the pledge to kind of send Turks to the moon at some point. All of this, brings us to a picture where there's going to be a lot of new ploys to distract the public to shore up the base with any available tool. Double down on vaccine rollout. I think is going to be really important over the next few months to ensure that the tourism sector flourishes this year. And quite a lot of talk of reforms, but my expectations are not too high on that. And I think in the second half of the year, we go to kind of what I said at the very start, and a much more difficult geopolitical picture, and a lot more kind of easing pressure. So I'm seriously kind of worried about the second half of the year because of that. But I'll stop here and happy to go into any of these issues and more into kind of geopolitics in the Q&A.
Well, thank you very much. And let me start by, as the moderator, thanking all three panelists for being exemplary timekeepers. It makes my job a lot easier. And I'm also happy to say that we've got a lot of questions on the Q&A already, so I'm going to delve right into them. And the first, if you like, set of topics, I think surrounds the quality of Turkish statistics. There is a mention here that, President Erdogan has appointed the turnover of Turkish statistics heads is quite high. So what faith should we place in particularly Turkish inflation statistics, CPI numbers? And then there is a mentioning particularly related to the 1.8% growth figure that several of you mentioned for 2020. The comment here being that, look, employment fell significantly in the Turkish economy last year. There's been very little private sector investment. Inventory has gone up. So should we frankly believe this 1.8% growth number? It's basically for any of the panelists who wish to answer. Alvaro, you need to unmute. You're muted.
Well, first of all, I think that we and also the central bank and other people were expected higher than this figure, even higher, according just to high frequency statistics. And I manage the big data division of the bank, and I manage a lot of countries. So I really think that the GDP growth figure was like this. It was 1.8 quarterly. It was near 6%. Yearly, year on year, the central bank, even ours and the rest of the consensus was expecting 7%. So first, it was a little bit disappointing, the figure, relatively disappointing. Relative to the statistics issue, I don't know, but I suppose that if the statistics president were very obedient, he will maintain the position. But it looks that the turnover of the statistical office it is really high. So I suppose this is another thing. The second point it is that I think that if inflation figures were somehow masked, we wouldn't have 15.5%. This because 50.5% is already a really high figure. So this is business as usual. My work, I'm an econometrician, statistician, is to work with numbers. I don't really suspect about the figures, but it is something that it will always be there as a suspicion. And this is a problem of trust. And what they have to do, the authorities, it is to be highly transparent and also to make the right policies to recover trust. And this is like this. In the other hand, we will continue with this. It remembers, Jacob, the story about the 7% GDP growth in China, the 12%, it will go on, but my work is to work with the numbers that we have. There is, they follow the Eurostat statistics and so on. But I understand perfectly this, the suspicion, and we will continue to with that for a while.
Anybody else wish to weigh in on this? Fatih, you have to unmute.
Well, okay, thank you. Regarding growth, 1.8% growth, it is normal, given that there was a really very rapid credit expansion. So, given that rapid credit expansion, it was unprecedented in Turkey. State-owned banks, in annual terms, increased their credit expansion more than 100%. So, given that huge real credit expansion, its impact on several sectors. So, it is normal that Turkish economy grew by 1.8%. But the point is that the quality of the growth is not that much good. There is not an increase in productivity. So we all know that rapid credit expansions are risky, given the financial crisis observations in the world. Before half of the financial crisis, countries faced rapid credit expansion. So this 1.8% growth was on the expense of financial stability. That's why I emphasize in my introduction that monetary policy is not enough, okay? We need a transparent announcement from the Banking Regulation and Supervision Agency that there will not be a non-performing loan problem, or if there's going to be a non-performing loan problem, then we need a clear plan how to solve it. Regarding inflation, I don't have anything to add, okay? Thank you.
Unless you, Masraff, have anything to add, I will go to the next question. Okay, the next question I think is probably centered around monetary policy. The questions that there's several that touches upon this issue, but I would say Given that inflation numbers are still quite high, so should the central bank, assuming that the pivot to orthodoxy, as Masraff said, is lasting and continues to, the current governor continues to be in office, should the central bank continue its rate hikes? And if so, why, given these already implemented rate hikes, have we not seen a further de-dollarization of foreign exchange deposits by Turkish retail depositors? I don't know who wished to go first, but the floor is open.
I can just say, maybe again, from the political side very quickly, I think it will take a lot for locals to be convinced of this inflation targeting story. I think there's been a lot of there needs to be a lot of kind of confidence and credibility building by the central bank. And let's just remember, even after 2001 crisis, de-dollarization takes time. We were around similar levels of more than 50% FX savings over in terms of overall savings back then, and it took us to 2011-2013 period, I believe, for this to kind of go down to 30%. So it takes time, and that was under an IMF program and the political conditionality and EU as an anchor in a big kind of political and economic reform program. Right now we don't have that, and therefore I think even though you see the foreign investors getting excited about the kind of rates, I think it will take a lot more kind of credible reform program and inflation targeting for locals to be convinced. But I'll also defer to Professor Özatay.
Okay, thank you. I was serving as a deputy governor from 2001 to 2006, when the inflation rate came down from 60%, 68% down to 6%. Okay. As Masraff Naz mentioned, there was a credible program, IMF program, structural reforms, etc. At that time, there was a very famous academic article circulating in the central bank corridors, rooms. The name was "Addicted to Dollars," and it was examining the experiences of a number of countries, and the result was that de-dollarization is a very difficult job. You need time, okay? Just a rate hike cannot trigger a de-dollarization. Your domestic residents, their high inflation memory cannot be erased over the night. You need time. So it is obvious that we have not been observing the dollarization, and the reason is this: it is very difficult to convince them. Okay, so regarding the monetary policy, now there's a dilemma for the central bank. The current inflation rate, February 15.6. The policy rate is 17%. And given the pickup in commodity prices around the world, this 17% versus 15.6% is not good. But on the other hand, this 15.6% inflation is a reflection of sharp depreciation up to November. Okay, but since November, we have been observing an appreciation, a very significant appreciation in Turkish Lira. Plus, now there's no credit expansion in real terms starting from January this year. The rate of growth of both consumer credits and credits to corporates is below zero. So this will, in the absence of a further increase in commodity prices, in the absence of a further negative shock, external shock coming to currency, this policy stance, even in the absence of help from fiscal side or financial stability side can show its positive effect on inflation starting from summer months. Okay, we can observe a decline in inflation up to, let's say, 12%. So the dilemma is this: the current situation, inflation is high, but for the end year forecast, expected inflation for the end year is 12%. So if you take into consideration the 12%, 17% policy rate is okay. But how to convince the markets that you are not under pressure from the government, etc., that's why you are not increasing your rate hike. I don't think that the central bank needs a rate hike. Just the dilemma is how to convince the markets, okay, that it doesn't need it. Thank you.
Alvaro, you are muted. Alvaro, you're muted.
I basically agree with most of them. First, on the dollarization, I mean, the problem with dollarization is basically trust, and trust, it is very easy to lose, but very difficult to regain. What you need there, it is persistence. The bank, we have in other countries like Peru and so on, we have some experience, and it takes very long. So my recipe here for the central bank is to maintain tight monetary policy for quite long, for quite a long period of time, if possible. On the interest rate, I also agree with with my colleague. Basically, what they say it is that what happened today, they was more or less forecasted. They have 9.5%. What they commented today to the investors is that this forecast is still online with the 9.5%, which is below the expectation of the analysts, as my colleague has commented. I think that the risk for another hike are increasing, but they are still wait and see to see what happens. We are also in months that will be very strange, given that we enter in the reversal of the COVID. So I think they will wait. But what it is for sure, what it is guaranteed, it is I think that they will be tight for longer at least. I mean, and the rates are still quite high in nominal and also in real terms for the emerging markets.
Okay, thank you to all of you. The next set of questions concerns Turkish-EU relations. Several questioners centers around the prospects for a renewal or renegotiation, expansion, reform of the EU-Turkey customs union. There was yesterday a meeting by Erdogan with the EU ambassadors. There's obviously been sort of talks of sanctions because of the Eastern Mediterranean on and off. So where do you see EU-Turkey relations going forward in these areas in particular? Masraff, you can start.
Yeah, thank you. Well, look, I think EU has lost its kind of leverage over Turkey. We have seen sanctions in December, not kind of hugely material, but even this political decision hasn't been implemented, right? So there's talk of sanctions. I think in March European Council meeting, I would say this is unlikely. Borrell probably will present kind of alternatives on kind of strengthening, how to strengthen that sanctions regime. And if the current dynamics hold until June, I wouldn't expect anything more in June either. Two signposts we're watching. One of them is the Turkey-Greece exploratory talks. The second one, I'd say more critical, is Cyprus talks, 27th, 29th of April under the UN auspices. Turkey is advocating openly for a two-state solution in Cyprus, but I don't expect Turkey to kind of walk away from the talks. If that is the case, I wouldn't expect additional sanctions. But if the outcome somehow leads to more explorations, more provocation by Turkey in the Eastern Mediterranean than some more immaterial sanctions, maybe in June. I think the kind of Turkey's kind of luck, I would say, is that EU is divided on Turkey. Very recently we had discussions about totally abolishing or kicking Turkey out of customs union, and they're kind of those who are considering revamping it. I think over the next year or so, these divisions are going to make it difficult for EU to come together to materially punish Turkey. But at the same time, Turkey is losing someone quite significant called Merkel, right? And I think her influence in terms of managing EU's relations with Turkey was, we can't underestimate that. And whoever replaces Merkel is going to be initially a lot more inward facing, I would say, focusing more on domestic German politics, but also a lot more of a novice at the international stage, probably leaving the stage to someone like Macron to lead that relationship, and that's going to be a lot more difficult.
Well, I'm not an expert on this. What I say is that for the short term, of course, enlargement is out of the cards. But I think that the question about the customs unions will be an opportunity first, because we are talking about a trade agreement, and people when talk about trade agreements like China and US, never intervene or interfere with political conditionality in this kind of agreements. What you talk is about chips, tariffs, and so on. But this is a good opportunity to maintain the dialogue for further reforms. And I think, I'm not a political expert, but I think it will depend also on how the relations between the US and Turkey evolves in the future. This is like 3 weeks ago that we heard about this great bargain and so on. I think that it is very Middle East is very complicated, and without Turkey, it is even more complicated. I think that the Germans and the US know about it, but the relations are very, very difficult. With Mr. Erdogan, I prefer to be optimistic, and I think the customs union is a positive for both areas. By the way, economically, the impact of including the service and agricultural goods in the agreement. But the technicians in Brussels recognize that this agreement is obsolete and should be changed, and it is only political issues that maintain this agreement not to be updated. So let's see what happens and I prefer to be optimistic, and I think it will be a good opportunity, but you never know in this political, and I'm not, a political expert on these fields.
I don't know, Fatih, if you want to weigh in on this one, otherwise we'll go to the next question.
No, I am not an expert on this.
Okay. I think the next set of questions centers around issues, the sort of the near-term economic outlook for 2021, which obviously is heavily dominated by the COVID pandemic. We saw the recent announcement by President Erdogan to reopen the economy. I think it's fair to say that the pandemic situation will quite rapidly, in my opinion, improve in the rest of Europe as well as in the United States in the coming months. So I'm wondering how you see this set of this issue, particularly also as it pertains to Turkey's prospects, or the prospects for a sort of a rebound in tourism revenues in the summer of 2021. We have now the announcement of a possible EU vaccine passport and the like. And particularly with regards to perhaps getting above the 6% growth that Alvaro mentioned for 2021, which is actually not, it's not particularly great given the strong impetus coming into, as was mentioned, and also as Masraff, it was pointed out on the in the Q in a question that this political strategy that Erdogan seems to be pursuing is sort of reminiscent of a bit of rallying around the flag, but is that really credible in light of what may or the way that he has managed to handle the COVID pandemic situation? So anyone who wish to tackle that set of issues.
I mean, I really don't know what is going to happen with the vaccines, but in the normal case scenario, I will say that I wouldn't be surprised if growth it is exceptionally high, not only in Turkey, but in other countries, just because of statistical reasons. And you will realize about this in 2 weeks. Why? Because we will enter in the second week of March and you will see most of the statistics fly in year-on-year terms. Of course, it is something which is the result of the statistical effect, but it contaminates the markets, the news. And I think partially what the market is pricing in these days of the rise in rates, it is because we are closing to this momentum. Remember that in mid-February, March, we already been moderating the economics in the Spain and Italy, if you remember. China was much more advanced, but we will start to see this. And this will be in the newspapers every day. Cars grow 20%, the other grows. And this is very symptomatic, but has to be looked from a perspective with a cold head, because it will be temporary. And this is for the medium term. For the second term, I agree with you that it will depend mostly on the vaccines, because the vaccines is the key for tourism. The other, it will jump yes or yes. But for tourism, what we will need it is that some security, vaccines, all of these passport. And really, I don't know what is going to happen. It looks that some of the countries are good on that, but I will be ready for the short term to be very strong statistics across the world.
If I can maybe add something to that, I think vaccines in Turkey are going to be critical as they will be in other places as well. But firstly to kind of boost tourism. But also it's the kind of greatest distraction from other problems. I mean, I live in Britain and after all that's been happened with this government's management, now that vaccine is going well, it changes the perspective. I think rally around the flag effect, for instance, in terms of foreign policy adventures, is not working as well as it did in the past, right? We have seen the kind of operation in Iraq, cross-border operation in February. And when you look at polls, it hasn't created the type of boost we had seen in the past. So I don't think those types of operations are having the type of effect that Erdogan would need to consolidate his base. So in that sense, this campaign to, Turkey's ambition to vaccinate 60% of the population by end June, I think it's still optimistic, but any successful steps towards that goal, I think would help a lot in terms of consolidating support. And if that happens, I would give more chance to tolerance for a tighter monetary policy, right? If that and tourism data is going better than expected, I would say tolerance will be higher for longer for tight monetary policy.
I don't know, Fatih, if you want to come in on this.
No.
Okay. I think maybe the next set of questions that I want to highlight centers really around U.S.-Turkey, so Turkey-U.S. relations. We obviously had the beginning of the Halkbank trial this week, which we know from previous such trials that the fines involved can be very high. We've also had renewed tension around the S-400 issues. So where do you see this relationship going, and what frankly is an acceptable or even good outcome of the Halkbank trial for Turkey, because the downside, since we are talking, potentially a significant amount of billions of dollars in fines here, is quite significant.
Yeah, I mean, I'm not an expert in US legal system, but kind of couple of interpretations I have read suggest that the amount of money that went through the US financial system, the maximum fine could be double that. So that brings us to about $2 billion, which is not anywhere near the kind of scary numbers that are being mentioned, if that is true. But the problem is that the court case itself is not the end of the story, right? Once that fine is issued, there are kind of two questions: whether Turkey is going to pay the fine, which I would, I think it will be difficult, because it would be an admission of guilt, and high levels of Turkish administration have been mentioned in the indictments as having kind of full knowledge and awareness of all the dealings, the legal dealings. So not paying the fine is obviously very problematic for Halkbank itself, but also for the general kind of casting a shadow on the banking system potentially. But then there is the kind of OFAC angle as well. Once the court case is concluded, then OFAC can come in, and there it's, I don't even know if a kind of threshold exists or a top ceiling exists for a fine. So that can take you to another level of risk. But overall, in terms of like US-Turkey relations, we do see room for a reset. I think that is real. Turkish side is certainly more willing, because I think Turkey sees this, and correctly, an opportunity for countries' growth. Having good relations with US means that you can attract a lot more inflows, but also FDI potentially. And without that, it's going to be a lot more problematic. So there's a lot more willingness from the Turkish side, and they're looking for that kind of phone call from Biden, if we can put it that way. But the US side, I think, is up until now showing the kind of cold shoulder, and they don't seem that interested in negotiating all the problematic areas in one go. The US side is saying, let's discuss S-400s, and this is what you need to do. You need to, send them back, or give us control of the operation. And unless this happens, which seems unlikely, I would say, the S-400 issue doesn't get resolved. And I think that leads, along with the kind of Halkbank, along with problems in Syria, and along with ongoing kind of human rights issues, I think in the second half of the year, the pressure over Biden will increase coming from the Congress. That's going to kind of bring us to a lot more challenging US-Turkey bilateral picture in the second half of the year.
Please go ahead. Yeah, please.
Relative to the magnitude of the potential fine, okay, the message is important, more important to the financial markets. Whether there will be sanctions, and whether those sanctions will put an obstacle on capital inflows through the banking system to the Turkey is more important. Remember my introductory remarks back in 2018. That was the triggering factor of the 2018 crisis of Turkey, were the tweets of Donald Trump. Okay, so if your economy is vulnerable to change in risk appetite of financial investors, then a sharp message implying that capital inflows can dry up, even you can solve capital reversals, that will undermine the stability of the Turkish economy. So the magnitude of fine is not that much important relative to this. Okay.
I don't know if Alvaro, do you want to comment on this one, or?
Well, I basically agree with the first opinion of the EMA. These decisions are very discretionary. It depends a lot of US Treasury. It will depend whether we are living in a reset or not, that I really don't know. But if we are living, if they are trying to reset the relationships, I don't think the penalty will be high. Of course, the final result depends on what is the market prices in and what is the final outcome. If the market is expecting only 2 billion and then the final outcome is very large, then the reaction could be also amplified. But I think it's difficult to know. So far, what we, in my experience in the late, I've been living in Turkey 6 years. We have been after several trials in Halbank and so on, and there is a lot of noise normally in the market that finally the penalty is much lower.
Okay. The next set of questions, I mean, there's a number of issues, and several of you have mentioned it also in passing in previous answers, concerning really this issue of that foreign investor interest in Turkey tends to be, I guess, for lack of a better word, sort of hot money. And there's very little or relatively little lasting FDI. And I think it was you, Fatih, who also mentioned that there is a sort of structural reform agenda that President Erdogan seems not to have been pursuing in recent years. So I guess if I could ask you on the panel to talk a little bit about what kind of reforms, I mean, several of you already mentioned that there is sort of a foreign policy prerequisite almost for this to happen, particularly vis-a-vis the United States. But what kind of domestic political reforms needs to, sorry, not necessarily political, but structural reforms needs to happen for foreign investors to again look at Turkey as an FDI destination rather than a place for sort of currency in and outflows?
Well, if you ask this question, any economist, you will receive different answers. Okay, the structural reform.
I'm well aware of that.
Okay. On the top, of course, on the top of the reform agenda, we have items not related with economy. Okay, it's obvious. The legal system. There are questions about the legal system. You know this, you follow this. So, and reform, whether it is politically feasible, I don't know. But for residents of Turkey, first of all, for the residents of Turkey, it is important, okay? Then, of course, it will pave the way for a market-friendly investment environment. If you can trust the legal system, the working of the legal system, etc., I guess it is one of the necessary conditions for a friendly environment. Perhaps that's one of the reasons why we observed a huge boost in real estate sector, not in industry, for example, in the last 7-8 years. So on top of my list, reforms regarding democracy, human rights, and this legal system. Second, of course, these tensions with US should be eased, but I'm not an expert on that area. These two items will help a lot to decrease the risk perception for Turkey, okay, and pave the way for capital inflows. First, short, of course, then depending upon the planning horizon, upon your policies regarding the financial, the fiscal, financial, and price stability, you can be again a hub for foreign direct investment. So then the third item, for example, we have to change the procurement law. Okay, there are big questions mark. it was in a good shape just after the 2001 crisis. Then it's changed almost 150 times. I forgot the number. Okay, so it's a must. It will be a very positive signal regarding the transparency of the tenders, etc. And if the government can find a way to tax the rents in real estate sector, in the land buying, selling, etc., it will eliminate a disincentive to invest in industry. Most of the industries become constructors in the last 10 years, okay? Due to this high rents in real estate sector. Then, of course, as I have already emphasized, comes the stability measures regarding price stability, fiscal stability, financial stability. So such a package, whether it is feasible or not, I don't know. I am not that much optimistic on that issue, by the way, but such a package can help a lot to boost the Turkish economy and increase its potential growth rate, despite uncertainties regarding the pandemic, tourism revenues, etc. They will not be that much problem. They will be transitory problems. Okay. Okay. Thank you.
Alvaro?
Well, if you ask me, talking about reforms is like talking about football. Everybody has his favorite. In this case, I fully agree with my colleague that the institutional ones are very important in Turkey. People normally comment on this, on productivity, long-run growth. I have serious doubts about it because I think that if the problem for Turkey, it is no growth but excessive growth, or I mean the quality of growth. If you take the average of the last 20 or 30 years, including the last two crises, the average is 6 point something. So it is an Asiatic growth rate. It is in Iceland and in Europe. So I think, so I normally prefer the ones that my colleague also mentioned, which is that those reforms who reduce the financial vulnerability are very important, especially the structural current account deficit. And this could be tackled by increasing the saving ratio. And also, I will start to think about de-dollarize with some the corporates. I mean, or some regulation to increase the hedging or whatever. Given said that, I think normally the FDI to countries are around in the very good times, and it was in Turkey too. It is around 3%. We are now slightly below 1%. I think that, and I know from my country too, that part of the story of this 3% was that Turkey make a very positive momentum at that time, but also the enlargement expectations. I think it is this is very important, and this is why I will fight for, if I were of the Turkish government, for at least the agreement of the upgrade of the agreement. This is very important for the foreign investors. Why? Because you also anchor somehow the expectations. The process to the EU enlargement for my country was important because we become a member, but also because it forced the government to make the necessary reforms, institutional and economic, to go to the club. So I think in some house, this is something that if it happened, it could trigger some good news in terms of FDI. But I'm not sure that this is going to happen or not.
Well, I don't know, Masraff, do you have an opinion of whether packages like that could happen or not?
Yeah, I mean, I think just 2 years ahead of the election, and we might even get an earlier election in 2022, I would say. I think it's very difficult to look at the polls and you see that your core support has gone down to 30%. Securing the parliament is looking dubious. the type of reforms we're talking about on the kind of tax front, labor market, these are the ones that would hurt the backbone of AKP's support, right? It would hurt the SMEs, it would hurt small businesses. I can see this year, we may have high growth numbers, but that's not necessarily going to significantly improve household finances, and it's not going to improve unemployment numbers. So in that environment, I think it's very difficult to engage in these types of structural reforms. I think what we're going to see next week is more like precautions, some corrections of some of the mistakes that were done over the last 2 years. So I think I would expect that type of precautionary measures rather than, I wouldn't call it structural reforms.
Okay. I think we may have time for one sort of topic area that we haven't touched upon yet, which really concerns energy, which is obviously in the case of Turkey, it has, as we all know, that there has been energy-related tensions in the Eastern Mediterranean surrounding gas. There is, if you like, pipeline diplomacy with some of the neighboring countries. But the mega trend in the global energy areas is, of course, even when you're talking about natural gas, even if you assume that natural gas is sort of a transitory energy, is of course decarbonization. So I guess my question to the panel is, given that, why is it that the Turkish government seems to be willing to take enormous foreign policy risks for what could pretty rapidly become, if you like, a stranded asset or something like that? Is there a lack of strategic thinking about Turkish long-term energy supply situation and how it links to its foreign policy linkages, or how should we think about that?
I think, there is thinking around renewable energy, and I think there are initiatives to carry that forward with solar and wind, and always been kind of falling below expectations. But I think Turkey thinks about energy and energy diplomacy in very kind of geopolitical terms. So it's part of the bigger relationship. It's just one subsection of Turkey's big relationship with Russia, right? You have Russia building a nuclear power plant in Turkey, and at the same time you're securing more gas contracts, and then you have another type of relationship in Syria with Russia. So in that sense, I think it becomes more of a kind of part of a bilateral geopolitical bargain. And I would say it's similar with Azerbaijan as well. SOCAR is the kind of #1 biggest foreign direct investor in Turkey, and Turkey's kind of trying to ensure its supply security, but I think it kind of goes into very much the kind of foreign policy and managing Turkey's relations with Russia. I think is at the top of the agenda, and it's very difficult at this point to kind of distract from that.
Well, I don't know if I could push either Alvaro or Fatih on the issue of the energy agenda domestically, because I mean, if you look at the energy agenda, the renewable energy agenda, both in the United States with the Biden administration, $2 trillion of infrastructure investments, and obviously the recovery fund in the European Union, where this is clearly viewed as a driver of growth. And I guess, is there no such thinking in Turkey, especially as you mentioned, Fatih, it's going to be important to shift out of real estate into something else. And in many other places, renewable energy and decarbonization is really viewed as an investment growth opportunity more than anything else. But is that not the case in Turkey, or how do you think about that?
Well, I think here, well,
Fatih, go ahead. Then.
No, I don't have much to say. My institute, TEPAV, is currently working on this issue and trying to bring this renewable energy, green growth, etc., to the agenda of policymakers in Turkey. But I'm just listening to them and following them, so I don't have anything to say, okay?
I'm reminded on the chat that the head of the International Energy Agency is currently Turkish, so there shouldn't be a lack of voices on this issue. Alvaro, sorry, did you have something right at the end?
Well, here I think it is different horizons. I agree with you with that carbonization will be the key point in the future, but you have to take into account that for Turkey, energy is at the heart of vulnerability. Why? Because the key vulnerability is the current account, and part of this is because excess consumptions of energy that the country does not produce. So it is also have, and by the way, at the end, this pushes the Lira, and I think the Lira is the main opposition party in the country. So if you go to Istanbul, everybody knows the quote of the Lira. If you go to Madrid, you ask the euro-dollar quote, nobody knows. But in Turkey, it is something like it is very at the heart of the DNA of Turkey. So and this is a very delicate issue, and if the president sees that he can solve this, but this gas discoveries and so on, he will use it. They use, by the way, very intensively the renewables in Turkey, the wind energy before 2 or 3 years ago with the EBRD, the European Investment Bank. So I think they will look for cheap energy in everywhere. In the fossil, with the carbon, I think that both trends will maintain intact and alive.
Okay, well, thank you very much. We have reached our witching hour, and I would like to thank the three panelists for what I certainly thought was a very interesting, and I learned a lot of the Turkish economy, for to the point, brief answers to questions. I don't know, Kadri, do you have anything to add right at the end?
Well, no, not really. I would like to just say that it was a really terrific. As an economist, I learned a lot, and it was a really great discussion. Just let me to thank you to all of you for joining us and making this conversation work. And it has been really terrific. Thank you so much. And let me thank also my colleague Anika and Alberto, who helped to put all of this together, and above all, to thank you, all of you who have joined us today, and thank you, and hope to see you again soon.
Okay, thank you all. Meeting adjourned.